what about the next leap forward for the market? Where is that going to come in from? And if you were to really stack up emerging market peers amidst India in terms of valuation, past performance, who's actually going to win the race? And who better than Nilesh Shah, MD at Kotak AMC, to answer just that? Nilesh, just taking a cue from your last tweet, who's going to win the race? Valuation or past performance?
A very, very tough question. But my feeling is that in today's environment, Indian valuations are justifying its past performance. And let's pray that we deliver future performance in such manner that this valuation sustain.
The valuations will sustain, but you've also just come out with your market outlook for 2024. So, just tell us what we should expect, because at the start of 2023, everybody was talking about maybe a paltry single-digit growth and low single-digit from the Indian markets, but we have beaten that. What's the expectation for 2024 now?
So, one, we have learned from our past errors that never try to predict the market. Our market outlook does not try to predict the market. We try to give data points to the investors so that they can fill those data points to arrive at their own conclusions over a period of time. For example, today we are saying that US Fed is maintaining a very, very delicate balancing between growth and inflation. By raising rates, they have controlled inflation, but by not taking out liquidity as quickly, they have supported growth. So continue to focus between liquidity versus rates. We are also saying that on one side, fiscal expansion is happening in most Western world, which is negating the impact of rising interest rates by central banks. Don't just watch central banks' interest rate policy, also keep a watch on the fiscal side of the government. In the Indian context, we see pockets of irrational exuberance in SME exchange, in some low floating stock counters. We are bringing valuation in front of our investors that look, these are the stocks where floating stock is limited and hence probably valuations are high. If not today, tomorrow, divestment supply could emerge, promoter selling could emerge, and those valuations are unlikely to sustain. So our whole objective is to equip our readers with data points so that events happening in 2024 can help them guide towards appropriate allocation.
That's exactly the point, Nilesh. Will the market cap follow robust earnings growth, or you think the market overall per se has run up ahead of the kind of growth projections we're currently working with, and what the potential could be for the next fiscal?
So market undoubtedly keeps on discounting future, sometimes more than necessary, sometimes less than necessary. But that's the nature of the beast. We believe Indian markets today are discounting the future growth trajectory. But beyond that also there is a growth which markets may not have discounted. Today we are benefiting from, let's say, there is no other credible alternative in emerging market. Russia is a shut door. China, Taiwan have their geopolitical risk. South Korea could be upgraded into developed world. Turkey, Indonesia, Mexico, Vietnam, these are smaller markets, uni-focused markets. In emerging market, there is no alternative to India. The second thing is our own governance standards. Today, when the world looks at investment, governance is critical for them. India stands apart and ahead of all emerging market peers. The third thing which people are noticing, even though we are not talking about, is green transformation of our economy. We are the lowest per capita carbon emitter in the world. We have created growth without damaging environment as much as some of the other peers. Combination of this 3G, growth, governance and green, and on top of it, policy stability. It makes India an unbeatable combination, and which is why, while our past performance is impressive, our future potential also continues to look impressive.
And Nilesh, while you've learned from your error and not trying to, time the market or establish the values we should look for in terms of the Nifty, but at least theme-wise, talk to us about which theme looked good, because of course this year was about capex, railways, defense, even in parts, rural recovery, etc. Do you think these things will continue into 2024 as well?
So one thing where we have been wrong for last 6 months is banking and financial services. Valuations are near their historical lower quartiles. Deposit and credit growth is in double digit. NPA pressure is reasonably under control, even though there are some concerns on unsecured loan. And most importantly, selling by FPIs probably seems to be behind us. Net financial services is one sector, especially private sector banks, where there could be bottoming out. The second sector which you mentioned, information technology, it has underperformed market for last 1.5 years. We have been observing net employee intake or recruitment by IT sector, and we are also looking at conversion cycle from inquiries to order in the global firm. We believe it will be difficult to predict this to the pinpoint accuracy, but clearly we'll be able to read the trend and accordingly will build positions in IT sector over the next 3 to 6 months. Apart from that, the trend which is continuing from the past is manufacturing in India. There are many companies who are leader in domestic market and now they are supplying to global chain, their parents or someone else. It's kind of double engine growth for them, local as well as global. There are companies which are becoming part of global supply chain management and their scales are expanding at a much higher level. We think manufacturing across variety of products could be bottom-up opportunity and a far longer term trend thanks to China plus one. More importantly, it's to ensure that we don't make mistakes. So we are not there in low floating stock counters, even though we suffer in the short term in terms of performance. We are largely focused on valuation and trying to shade expensive valuations in favor of a reasonable valuation. So one, we are ensuring that we don't make mistakes. And second, we are trying to bet upon reasonable valuations within banking, IT, and manufacturing theme.
That's the other thing, Nilesh. While the positives are much known and there is that momentum chasing us, and once the foreign flows as well kick in thick and fast, sky's the limit. But what about the headwinds that the market could face?
So as of today, the way market is positioned, unless headwinds are worse than what is feared or expected by the market, every correction is likely to be shallower than expected by the market, and a rise is likely to be higher than expected by the market. We did see last time many people were expecting 18,000, 18,200 Nifty to bottom, and market turned around at 18,800. We did expect, market was expecting about 20,500 to be the top, and today we are at 21,000. Because there is cash waiting to be invested in the market across local and global investors, we'll have to keep in mind that despite headwinds, corrections will be shallower and the rise could be higher. The one big worry for markets will be policy stability. Today, market is discounting continuity on governance and continuity of policies. If there is any change over there, then certainly there could be some reaction. India today is trading at a premium valuation to others. As Spider-Man movie said, with great power comes great responsibilities. With higher valuation comes higher expectation. So our headwind will be to meet those expectations, to deliver on those expectations. We are like Surya Kumar Yadav or Virat Kohli. We are supposed to score century every time we come to bet. A 10-run, 30-run cameo is not good enough.
Okay, Nilesh, on that note, we'll let you go. Hope we hit a century and not just a small cameo coming in from the participants, because there are the strength of the bench we have for us in the Indian market is quite strong. So I don't think that should be a big problem. But on that note, we'll let you go. Appreciate you joining us on the show.